Hello, traders. It's E from MarketWizards.com, reminding traders to use risk capital you can afford to lose. And it's a Saturday morning review just before 11 o'clock on the second day of December 2023. All right, let's get right to it with a look at the macro chart that I've posted several times. And I still believe that this is destined to be tested. We have the rollover coming in a week from now, December 11th. So, and we're 200 points higher already on that contract. So certainly this is going to become a factor. The previous contract high was in that 260 area. So my belief is that we will eventually be testing that. And probably for sure, once we get into the next contract. For now, we want to just focus on the December contract and look at a couple of things on this chart. I had posted several weeks ago that I thought that this was too steep an uptrend, that we needed to consolidate or at least pull back some, a regression trade. And I noted that this spot right here where I'm pointing was a prior high that has been taken out. So the goal in level-to-level trading is, if you can take out one, can you then move to the next and the next? And that's what's been going on, albeit with some back and forth trading as traders are positioning towards better value areas for the buy. And I had suggested several times this week that this was an important pivot, partially because of this moving average that was coming up, and partially because of this location where this is a retest of that high. And most traders, of course, would rather do it themselves. They don't want to listen to any advice from somebody that's had 25 to 30 years of experience. They'd rather make their own mistakes. And I get that. But there's sometimes you could save yourself a lot of time on that learning curve by listening, not to someone because he's an expert, but just because he's had more experience than you. And I think a lot of traders miss that. And I've seen some traders claiming that they are averaging in every time it bounces 50 or 100 points, adding more contracts. And of course, those are only paper traders or, someone that has really deep pockets. And if they're posting a lot in a Discord room or whatever, they're probably a paper trader. So nevertheless, we don't let other people get us off our game. We look to the market to understand where we think support and resistance should be. And for now, that has been my position, that until we bust this 58, 59 area in here, that is support, and we are range trading this zone. The system has levels that are already calibrated based on 16 days. The prior 16 days, all we need to know with this system, and it projects these ideas step by step. And that is why this 937.5 was called as our significant pivot. Below it, we can be challenging lower towards the next one. Above it, challenging higher. And we can see the effect of this range right here and how important this range was this week. And so this is the Bible. This is where I start from. And then we go back into lower time frames to go from there. All right, let's take a look at a couple of other charts. And one of the reasons I have a number of charts is so I don't have too much information on any one chart. And I still feel I have too much information on a lot of them. I see some charts where traders boldly show their work as if 50 indicators on a chart is something that your mind can interpret. I don't believe that's the case. I think less is more. I don't have a problem with more charts, but I have a problem with too much information on any one chart. This is that psychic vision that we're looking at, and this is obviously a smaller version of that. And we can see the base support is 781.25 in this framing, and the 93.75 up here is the resistance pivot. Anything below this is an extreme. Typically, we can hit the extremes, -1, -2, +1, +2 up here. So currently the resistance is back here. And last week was an interesting week. And if you go back and review some of the one of the other videos we've got here, you'll see just where we had interpreted this 937.5 and proposed that as a directional pivot for this week. And certainly we can see from this smaller time framing that this 859.5 was an important support. If we break that, then we get to come down into this box. And these are approximately 40 points. So we know that back in here would be around the 40 area. And that was my next support target if we busted here. But we never did. We held that. And if you look at the post on X, you'll see that I talked about this was support until broken. And I thought we would get on Friday a challenge of the lows. And if we're looking at a 30-minute chart, we can see tails here. Where we never really could sustain any trades under that 900. So I thought first, let's shake out all of the aggressive longs, and then let's, being the beginning of the month, let's look for this double to hold and a bounce into the close. And if you look over on this chart, which is the chart for Friday, the day before was the high for RTH was 16,051.5, and that never busted. So once we got the sell off and we got the low to hold, and we started to move this side, then again we come back with that same idea. This 32 to 937.5 would be the key pivot zone, and if we held that, then we were probably destined to come back up and test that 1610 to 1620 area, which I had also posted that it seems inevitable that that's going to become a challenge point. And once we got this bum's rush over into lunch, we ran up to this high, this double top high, and then we settled back in. And I'd also posted that 977 looked to me to be an important support. And as long as we could hold that, I thought that the bias was still upward into the highs for the close. And we never broke that. We got this lunch contra, came back down in. And at that point, I'd posted to a few of the traders I was working with that you better be paid by this 85 area. It just seemed to be the area that they had to hold if we were going to go back up and sustain any kind of holding the trap shorts into the close. And you can see those ideas. Once we come back in here, we just can't get back into the pipe, which is this yellow circle. And so we hold the 75 as support, and we bounce back up, and we close in the middle of this box up here. So this stuff works. It takes time to learn it and takes time to assimilate everything together, but I don't reinvent the wheel. There's no need to. We've got the tools. We just have to learn how to interpret them properly. All right, let's take one last look at a couple other charts. And again, if I put all this information on any one chart, it's just overwhelming. I still feel I have too much on, but I'm learning how to read and interpret charts and the things that I need to be looking at. Sigma chart. Above the red, we come back in, we cross the midpoint, and we come down, and we are out of bounds down here, testing at the early morning in IB in the first hour of the day. Then we finally regroup, and this is a 15-minute chart. We finally regroup, and we start to get our bounce, and we never can come back and take out these lows, and then the push, and we get above this green line, and then we go up to the other green line, and then it's a continuation with higher highs and higher lows rest of the day. And we can see these turning points are squeeze pivots. And if you can't get below this 933 to 937.5 that we've talked about, then you're still destined to come up and try to test resistance. So we put all of this information together. It's not any one chart that's the king. It's all of them together, and that's why we have what we call the jury system. We look for a preponderance of evidence that number of charts agree that, okay, this is the direction we're probably going. And we can see the lunch contra clearly on this chart. We've come back up here into that double top with the high from RTH the prior day. Come back down. We cannot bust this area in here. This is 992. There's 888. All of this just tails down here. And then a lot of traders love to make speculation about the close of the day. And this is where I think on a Friday, you need to be conservative. You know, who cares? You've either made your week already or you haven't. It's no time to try to make up for lost time. Now, all you do is get yourself in trouble. So my recommendation is you'd sit out that last hour. There's no reason to be in the market. If we are looking at the weekly chart, which I believe is the day trader's best friend, we can see this double bottom that held. If you like some type of indicators, you can see locations where we are holding the lows. We are having a divergence right here from the prior day, right? Scoot up into the close. And I glance at these, but truthfully, they're not my main focus. I'm much more interested in the price points. So I'm looking at things like these levels. And if we get above the 900, then I know as a weekly perspective, our next goal is you got to get up here into this 44, 45 area. And then you got to get into the next box and hold up there. And we don't. The first probe up in here, we're back down here. Then we finally come through. And so this 988 becomes a target that needs to be overcome for further travel. And then, of course, the 1608, right? The week open. And then we've got to get up and touch and try to capture this 16,032.25. And if we can get that, we have the right to go into the next box. We never were able to sustain that. But on the pullback, we note that 88 area holds. And then we bounce back. And it's this type of study that if you will do it over and over and over, you don't need to read books. You don't need a guru. You just need somebody that can help show you these ideas and let you learn it. And then you need to allow your intuition to work. That's my pitch for self-learning. You can shorten the learning curve by understanding things that work and then trying to apply them yourself instead of just going out there and saying, "Hey, you know, I'm going to do this on my own." That's a fool's game. Why? Because it takes so much time to learn this stuff. So you really can shorten the learning curve, my opinion, if you take the time to study these things and not just blindly follow a guru, but say, yeah, that makes sense. I'm going to take a look at that. And we had already understood for the week that we thought coming into this week, it may be more neutral. We've hit some really solid highs. So that means you don't want to buy everything at the high. We know that it's a strong trend, so you're looking to buy pullbacks rather than just sell. And so we had 2 solid days of selling, and everybody wants the third down here. But you know what? Traders that had a great week want to capture their profits, and that causes a bounce. And most traders don't understand that part of sequence trading. And in my opinion, that is everything, because someone, even if it's not you, someone wants to capture profits. And that is what causes markets to bounce back and forth, and for day traders to make a killing if they know what they're doing, compared to someone who is just a buy and hope trader or a sell and pray trader. And I encourage you to investigate systems like these that will allow you to always have an opportunity in the market. And reminding with a quickie, a reminder that we have the power special that is going on through the end of December. And anyone that has interest, check it out. You'll find that under the blog, and go to the power special post and consider this a investment in your education, one that will pay you back multiplied many times over, is my belief. All right, have yourself a wonderful weekend. Thanks for listening, and as always, be safe out there, guys.